founders, operators, and growth-minded entrepreneurs who want to build a business that actually scales and eventually becomes valuable assets. Because here's the reality that most founders discover the hard way. Revenue doesn't automatically equal value. You can double sales, you can grind 70-hour work weeks, and you can hustle your way to $1 million in revenue, but still be running a business that no buyer would want to touch. I've sat across the table from private equity groups, strategic buyers, and investors, and the first thing they generally look for is not always revenue. It's structure with systems, clean financials, operational clarity, and a business that can run without the founder having to be glued to the desk. Today, we are talking about one of the most overlooked drivers of scale: operational infrastructure. The back office, compliance, financial discipline, HR structure. Not the glamorous side of entrepreneur, but the exact foundation that determines whether a business can scale beyond the founder. Joining me today is someone who spends his time solving that exact problem. Justin from Propel is a firm that is focused on helping founders remove operational drag so that they can focus on both growth and leadership. Justin, welcome to Lead, Manage, and Thrive.
Thanks, Joe. It's good to be here.
Awesome. Well, let's dive right into it if you don't mind. Let's start with like the origin story. Propel has a line that I really like. You have a business to run, don't get bogged down. So, what is the gap in the market that led you to build Propel?
Yeah, several actually, but I want to come back, if I can, to that introduction that you gave where you're introducing your podcast again, because that just really resonates with me. Because of the clients that I work with, there are so many of them that reach a point where they begin to realize maybe it's just a suspicion or whatever it is, but they've hustled and they've been the grinding force behind the success of the business for years, sometimes decades. And sometimes they reach a million, sometimes five, Joe, and they still haven't. I've got some clients that are at 3-4 million bucks right now, and they've been there for 10 to 15 years, some of them, but they are still the linchpin of the whole model. And they know, because they start to sniff retirement and they're thinking, how do I get through, like what is an exit strategy? First time they start thinking about an exit here, and they realize nobody really wants it. So they start thinking, will my kid take it? Will, what can I do? And without, like, you got to understand, if you pull one person out of that puzzle and it can't continue to run damn near as good as it did before, then it of itself has very little value whatsoever. And a lot of people miss that. We get caught in this firefighting mode where we feel good about the fires we put out and the things that we do and the chaos that we wrangle up and control from day to day. And that does shit for your enterprise value. Zero. There's no return on that investment other than a little stroking of your ego. So founders, you gotta ask yourself, you operators and founders out there, like, is it an ego stroke that you're looking for? Or are you looking to maybe one day leave this business and actually go fishing? Actually, like, have some fun and reap some of the rewards of these decades of work that you put in. So I just had to mention that because as you were talking about that introduction, I'm just thinking of several people that I'm coaching right now that they fit that to the T perfectly, where just the hustle and grind doesn't give them the results. So the gap that I found in the marketplace, it was an accident. I started with a phone call from a friend, and I was working on some legal issues that I had to deal with, and we may get into some of that. But my friend called and just said, "Could you help me set up an entity and just help me with payroll?" And I said, "I don't do that. What are you talking about?" And this was years and years ago. And she said, "I know, but you have lawyers and all those people that are working for you right now. Like, isn't that something that you do that you could figure out?" I was like, "Well, yeah, that would actually be pretty easy for those people that were working on this stuff." So we helped her, and it gave her a great, like, I watched her over the next couple of years just take this idea that turned into a business, that turned into revenue. And then she bought another house on the East Coast, and she would go back and forth from the West Coast to the East Coast. And I started realizing just how much value she took from that little bit of help that we only did about 2 hours of work a week for her. I mean, it probably cost her a couple $100 a month. It was nothing. And I was just charging her for the time that our people were spending on it. And that's really the origin story of how that company got started. In particular, I mean, my venture into entrepreneurial endeavors didn't. It was many years before that, but that's where I realized that there's people out there just like me that they're builders, they're innovators, they create things, they'll take risk, and W-2s and 1099s and quarterly reports and 941 returns and all these things that generally makes, I mean, even just saying them literally gives me like a reaction. Like I want to tighten up a little bit because I know that I have to be protective and I got to be careful. I can't file those things wrong. If I do, there could be fines, there could be fees. So that takes some of the creativity and innovation spirit out of people.
I couldn't agree more. And sometimes the best business origin stories I've ever heard happen by what I call a beautiful accident to exactly what you said. But obviously, you saw the gap, not just with her, but ultimately with so many other people, and you helping them to close that gap. So I love the origin story that you just shared with us.
Right after that, sorry, I was just going to mention there was a couple of guys that I met that were friends. They lived in Hawaii. I lived in Hawaii for a while, and they were looking at buying a business. And this was really what sealed the deal. I helped several people, and I kind of had this as a side business. But I met these guys, and they were, I mean, they were good guys. They were smart. They were capable, but they didn't have a ton of business experience. And they had this idea to buy this business out, and they were gonna make it better. And they had all these great business ideas, but it was time to review financials and do due diligence. And I could tell every time we got to that topic, they just, all the excitement went, all the oxygen came out of the room, and it went from all this inspirational stuff and, we're going to make this better and this better and this better. We're going to take care of these customers. We're going to make it such a great experience. And then they would talk about numbers, and they started to they close up and clam up. And I thought that's where I started helping them. And that was 10 or 12 years ago, and they've been running a multi-million-dollar business since, and they just needed this much help to feel like they weren't the emperor's new clothes. They weren't standing there naked. They just needed this much help. It wasn't a lot. It was just a little. And that gave them a lot of confidence, and they've done a great job since. And I've got hundreds of those now just under our belt. That's great.
I love it. And that's a fantastic analogy. The emperor's new clothes. I love that. Why do so many founders kind of underestimate the weight of the kind of back office responsibilities that are so vital to a business?
Well, I think it's because I've yet to meet, I'm trying to think if this is true. I'm pretty sure this is a true statement that I'm saying. I've yet to meet somebody who started a business, like a founder or an owner operator, that comes from the accounting world, the back, and I know they exist, but in my circles, I don't. Most people start the business that they start because they're really good with tools. They're really good at pulling wire. Their dad taught them how to do it. They worked with their dad. They've been electricians for 15 years. And they're like, damn it, I'm doing this on my own. So or it's a plumber, or it's a heating and air conditioning, or it's sheet metal, or it's property management companies. Like these guys and gals that are running these companies, that's typically their lane that they feel comfortable. Now, Joe, if you compare that to the lane of somebody, like just picture in your imagination, like an HR director or a CPA or an accountant. You don't often see those people out on the job site pulling wire. You know what I mean? It's kind of like it's the opposite. So I think a lot of those owner operators and founders, they overlook what that back office can do for them, because I think it's back to the emperor's new clothes. Actually, like there's a little bit of scarcity thinking around that. Like, I don't know what I'm doing. I don't want to step in. I don't want to look stupid. That's a big one. But then their comfort zone is they can talk about the wires, the runs, the circuits, the amperage, the load that they can carry. They got all that stuff in their sleep. It doesn't take much. So generally, one of the big early mistakes that somebody makes after they've gone out on their own is they hire somebody in the field first. And when they bring people into the field or into sales or into something else, every new person, every new job starts to create more complexity in that business than it needed to. And sometimes the analogy that I use is like building a house from the roof down. That's just ridiculous. You have to
Don't do
go
that.
underground first, and you have to
Yep.
put a foundation there that will support all the weight that goes up. And if you know how high your structure is going to go, you can plan your foundation accordingly to support a lot of freaking weight.
Couldn't agree more. And to your point, it's a term I use with my clients all the time. A lot of founders like accidentally build what I call a gravity business. So it's kind of similar to the analogy you're talking about, where every process, decision, approval, it all collapses back on them like gravity does, which means that growth creates more chaos instead of more leverage. So I love that. When you say unchaining a founder from their desk, what does that look like in practical application?
Yeah, and it's way more than the desk. Sometimes it's their truck, sometimes it's their tool bag, sometimes it's their, whatever it is. So in practical application, what that means is, well, I could sum it up this way. The first thing that I get to work on with people is getting them a new paradigm, a new perspective of seeing how to grow. And my tactic for how someone grows is to eliminate this I'm going to hire to grow my business sort of mentality, and instead start turning that vision inward. Like, if I'm going to do something, it's going to give me more time. Me as the founder, as the owner operator, as the one out here, as that gravity center that you described, the person where everything's routing back to. So every decision, especially early on, if I'm working with somebody directly, is I teach them how to flip that paradigm upside down. And instead of creating more gravitational shit to pull towards you, I teach them how to make those decisions on what will give them a little more time. So I like to focus in on 5, 7, 9, 12 hours in a week, because anything around 7 or 8 or 9 hours gives somebody like a day, a work day. And that an extra 30 or 40 or 60, 90 minutes is good, but an extra 7 or 8 hours you feel. You're like, whoa.
Oh, yeah.
So if I can help them start to see things a little bit differently, and then give them the first few moves that will help them get back that kind of time, then they can start thinking of things in time a little bit differently. They can think about, should I go to my son's game? Should I go to my daughter's recital that I haven't gone to ever, or that I continue to miss because of the fires? Or maybe that's not that's part of the equation. So maybe they start thinking about, well, what's really a problem in my business is how I take care of these customer service calls, or my installation schedule is just screwed. So if you got an extra 8 or 9 hours in a week, can we now put that into optimizing the installation schedule? Because if we do, what will that give us back in time? Usually that optimization gives us back another 2 or 3 hours and more efficiency. Now we might be optimizing 2 or 3 hours across 5 different employees. So that's 3 times 5, 15 more hours back to the bottom line. And that's where we start. It takes a little bit of foundation building, and then the hockey stick starts to go up pretty quick, because people can see. And it's not because I don't have any special sauce. I don't know their business better than them. All I do is get them unfreaking chained. And if I can get them, if I get that chain off of them, then their true creativity and that entrepreneurial spirit that they have, I can let it loose and let that thing go.
Love it. I love it. Take the chains off. Break the chains, people. Break the chains.
Right.
Super powerful shift. When they get out of that operational quicksand is kind of the terminology I've used in the past. Generally, you see 3 things happen. Decision speed increases, strategic growth can occur, and then the opportunities that maybe they passed up on because they didn't have time or complexity to be able to execute it, now all of a sudden reappear. And those, whatever it is, 8, 9, 10 hours, maybe even 15 as you scaled across multiple employees, gives them the capacity to then either breathe or scale better. So
right. So I've used an analogy of pulling levers, because you can picture a guy sitting in some heavy equipment, and there's little sets of levers that do the little micro movements, and then there's the big ones that turn the machine all the way around. And a founder is an owner operator. These guys that start businesses, they're pulling levers all day long. And when you jump in and start something, and if she's the first one to start building the business, it's just her, there's nobody else going in there, she has to pull every lever. But what happens, that creates a little bit of a habit. And that's why that gravitational center you talk about exists, because in day one, there's nobody else. Gravity, there's no other center of gravity. So it's got to go there. And nobody really teaches her how to do that part of it. It's like, okay, now if I bring in person number two, who is the right person to bring in and what order should I bring them in? And then two is, and then how do I get some of that gravity to go land on their shoulders? And that very few people talk about and know how to talk about in the right way and in the right sequence. So that gives you the opportunity to stay on the big levers. And so when I tell people, the startup people, like the ones founding these businesses, these owner operators, if you spend 10 hours a week pulling levers that are $10,000 levers, and then 30 hours a week pulling 20, 80, $100 levers, the idea is to get the small levers off to somebody else, not to get the big ones off. Right. Just keep pulling those. And imagine if you go from 10 hours a week, let's just say we go 20. Like your business will probably 2.5, 3 times itself over the next 6 to 12 months, if that's the shift that we make.
Couldn't agree more. I know you mentioned one of your early clients was kind of in that building phase of starting a business, didn't quite know what to do in terms of entity creations and things like that. So in building a bedrock, what is something from a business formation and compliance perspective where like long-term consequences could be affected if they don't do things correctly?
I mean, that's there's unlimited opportunities for things to go right and wrong. And I would say that while the risk is real, you definitely have a lot of risk for things that could go wrong. I also don't like to slow down growth or progress by trying to think through everything. So the big thing is context, right? Most people, they don't have context with, if they get professional advice, for instance, even advice from a friend, they're giving them a little bit of shit. This is true with AI now too. It's the same thing. If you give AI just a little bit of the information and then ask it for a decent decision, it's going to give you very broad, very generalized, very vanilla, very boring answers that are not really particular to you. But the more context that you pour into it, the more details that you give it, whether it is your CPA or your lawyer or your AI, the better and more tailored and narrow that result is back to you. So your question about compliance and setting up the entities the right way, again, it's a balance. And this is where I think a lot of people miss even making a call, because they don't make a call to somebody else because they feel intimidated and they may not have the answers. And like the doctors and the lawyers and the accountants, they're really good at talking down to us common people that don't have the degrees and know all the acronyms that they know. And it's all just BS, but if a lot of it is our perception in our minds. So I would say start giving people context. If you're already in business, definitely you need to give your context to your professionals that help you navigate the business world way more than once a year. Most people don't talk to their accountant until March. And then they think, man, I feel like my accountant doesn't even give me good advice. Well, do you think? Like, they know nothing about you, If you think they're looking at every transaction in your checking account just because you gave them your books and stuff, not a chance. The software is doing 99.9% of it, and their name does that last percent. Like, that's it. It's nothing. So that, I say it's a moving target, Joe. I would not, if somebody's just starting out, like my friend you mentioned, I would say set up the cheapest and easiest formation. Again, I'm going to give you generic vanilla answers based on not very specific information. I'd say you start with the general easiest and cheapest entity to set up, so that you have an organized operating entity, so you can take advantage of all the tax write-offs, all the liability protections and everything. So you make sure that's legit, so you don't get sued, so you can't, taxes are a big one. You want to make sure you can deduct all the legitimate expenses. You do that, and then you just start going. And as you go, you have to communicate the context back to professionals that can help guide your path, because you may need to change. You know, I've been involved in
Sure.
startups, and we started as an LLC, then we went to an S corporation, then we wanted to raise money, so we went to a C corporation. I mean, all those changes are possible. And in the beginning, before we even knew if the business had legs, it would have made no sense to spend $5,000 to set up a C corporation.
Right.
You know, an LLC costs $100, so it's no big deal. But then later on, it made sense at that time. So I think it's always a rolling, moving target. Yeah.
Couldn't agree more. And I've truthfully seen so many deals at the end where somebody didn't recognize it was a moving target and just thought, well, I created an LLC 6 years ago. I don't really need to create an S corp or a C corp. And then they get to trying to exit and they're not set up correctly from an entity perspective, and it creates a valuation discount. So
big time. So Joe, one of the things that I try to help people with, so a lot of people come and talk to me. I'm kind of like the systems guy, and people think that, again, Emperor's New Clothes kind of stuff. This is weird. This topic keeps coming up, that metaphor, but let's go with it. I guess it's the Emperor's New Clothes episode.
There you go.
In that topic with the Emperor's New Clothes. Sorry, I lost my train of thought there. Okay, let's move on. Sorry, we can edit that out, I guess.
We'll come back to it. Okay. How about the structuring of either the entity at the beginning or in the moving target phase impact potential investor confidence down the road?
So clarify that question for me a little bit more. So what?
So you mentioned earlier, creating an LLC at the beginning might make sense. As you grow and scale, now you move into an S corp, and if you want to potentially bring in investments or raise capital, moving into a C corp could potentially be the right move. How does that actually impact potential external investor confidence?
I guess a lot of it would really depend on the nature of the deal, but there are certain structures that are better for certain transactions. So this is where I would say a moving target is something you need to keep in mind. And I do have my train of thought back, so I can get back into that, which is relevant here now again.
Yeah.
So I don't know. I think if you're going to sell off, you want a little bit more of a formal structure than an LLC in most cases. But I don't know that I would blanket it with all cases, because it depends on your size, it depends on your industry, it depends on, you know, what kind of business that you're in. I think these things all have factors, but what's important is, so let's say I've run this HVAC business for 10 years. I got it up to $2 million and it's running, it's pumping. I've got all the systems. I've got everything up to date to where I can step out of there, and I'm very much founder optional, not dependent. So I feel like it's got some value, and I'm thinking, you know what, I'm probably going to run this for another 2-3 years, and I'm going to see if I can sell it. So if the first time that crossed my mind, what I would say if I was working with somebody in that boat, or if that was my company, I would immediately start calling people to put that into my rotation of what I do on a regular basis to begin learning about that. Because if I just wait and I keep thinking that 3 years turns into 2 years and it turns into 1 year, and now I'm like, I'm ready to get out of here and I've done nothing. Well, it's just like anything. You know, you want to go learn a foreign language and live in Italy and speak Italian, and you don't do anything until you just move to Italy. Well, it's one way to learn immersion, right? But you could do things to get ready on the way up. And that's what I was going to go to earlier, Joe, is as when I work with people, when I see this trend that they don't want to talk to these professionals, because again, those Emperor's New Clothes is, hey, I work with sheet metal all day. Not my favorite thing to call my accountant and have a conversation. They're boring. They don't really know a bunch about my business. They don't. I feel the same way. A lot of people think that I must dude, I don't hang out in spreadsheets for a fun time. You know what I mean? I don't like that stuff. It's not good. But what I do to offset that, my system, it's not very complicated, but it's pretty damn effective, is you will find on my calendar once per quarter, 4 times a year, I have a 1-hour call scheduled with my CPA. On that calendar appointment is a link to a Google Doc, so that if something comes up to my mind, I'm like, I need to ask him about that. I wonder if I can write off this car. Or maybe I'm sitting at dinner with my wife and I'm like, is this a tax deduction? Because we just talked about the business. I open my calendar and I search the CPA. Up pops those appointments. I open the Google Doc, I type it in, and then Boom. It's there. It's captured. I don't think about it again. Those calls come up once a quarter and I get on the phone. And if I have an agenda, I tell them what's on my mind and what's on my agenda. Most of the time, I don't have an agenda, to be honest. And I just call. One of those conversations that I had years ago that I've spoken about is it was November and it just snowed. And I wait till the tax season is over, right? Because up until October 15th, he's very busy and he's kind of stressed.
Sure.
Early November, he doesn't really care. He's just like, hey, what's up, man? October 13th, he's like, what do you need? I got to go. So I noticed that and I adjust my meetings to fit within his schedule. I call and I'm telling him how the day before, a week before something, my wife slid off of the road in an expedition that we were turning in on a lease the next day. But it was a little bit of snow, so we didn't have snow tires on. She slid off the road and did like $18,000 worth of damage. I'm just telling him the story because that happened to be what my reality was the day before, right? He doesn't hear the story that I'm telling him through the same lens that I'm telling it. What does he hear it through? A filter of a CPA. And he says, is that the expedition that this company leases? I said, yes. So I'm bemoaning my own, like how terrible this is and everything sucks. And he starts thinking of the implications that it's going to have for me and the opportunities. He tells me about the sunsetting of accelerated depreciation. He asked me if I'm going to buy a new truck. Long story short, I take delivery of a brand new Ford F-150. It's like a $78,000 truck on December 31st at 10 a.m. I use it for a business truck the entire rest of the year, like 8 hours. I write the whole thing off. Okay? I accelerate all that depreciation, save myself $70,000 in taxes. I would have done none of those things had that call not been on my calendar already. Because I just figured it's a lease. The lease is over. I'm turning it in anyway. I have insurance. F it. Big deal. I guess that just sucks. I got to pay the deductible. Instead, I still paid the deductible. It got all fixed. It went back in. I got a good deal on the repair. And that parlayed into a sweet opportunity to depreciate a whole bunch of taxes that year.
Love that. Well, first off, going back, is the wife okay? Was everything fine with the accident?
It was silly. She hit a little mailbox, and it was crazy how much damage it did for a silly mailbox. So yes, but she was good.
So an $18,000 accident actually saved you 70 plus grand at the end because you had a strategic conversation with the CPA.
Yeah. And so when I talk about system and the emperor's new clothes, and that's something that I start working on with people. Like, look, a system doesn't need to be complicated. Some are, and some become that. But initially, I hate taxes just as much as the next guy. I don't like talking to my CPA just as much as the next gal, but I don't know the tax code, and it's not what I want to study and become and learn. So I check in 4 times a year. That keeps things current. That lets me tell stories. That let me talk about what's going on. And so that structure, now to come back to this enterprise value and the structure you were talking about, I've had conversations like that where once I get through like the news of the day, and in that case, it was the expedition sliding off the road, then I get into, now I'm working on this project and they're going to give me membership interest for this thing because I'm on this advisory board. And he'll say, hold on, how long has the company been there? And then I'll learn something new in that call about the structure of the company. And he will tell me, you can take your membership interest now, but as soon as it reaches this level of equity or this level of revenue, you'll want to push the rest of the board to move into a corporate structure with shares so that you can take this advantage and this protection and that protection. Because if it does reach this valuation, then you'll be able, all of which I don't keep. That's not how and why I do business. I do because I like to build stuff. I do because I like to create enterprise value. I like to build that lifestyle, but it's worth $250 an hour to him to help me keep things straight,
Oh yeah, totally agree. And I think it's a great segue. I'd love to talk about like the financial side of the business, because a lot of the clients and founders that I talk to your point, they're really good at whatever the service or product is of the business. They're not always so good at the financial side because it's just not up their wheelhouse. Maybe they have a CPA, but they probably only talks to them once a year at tax time. So when you talk to a company who's got messy financials, for lack of a better way to put it. What are some of
Yeah.
the first like red flags that you typically see?
Well, I guess the red flag that would tell me that there's probably something that needs to be addressed is they just don't know. Like they don't know they don't have any kind of system, and they've gotten pretty good at cursory sort of surface level answers when somebody asks them about finances. So when it's like, well, how much is payroll? Yeah, it's going to be around, 40 or 60,000. And to them that may seem like that's okay, but if that's something you have twice a month, you need to know the dollar figure that it is, what it was last time, is it increasing next time? And so that just creates, I mean, I did this with my son. Okay, he's 18 years old. He's a senior in high school, and he wanted to talk about spending some money somewhere. And this is the same thing that I do with business, because we have tremendous resistance to these things that we don't like, this emperor new clothes sort of mentality. So we come up with shit, Joe. We build things to avoid looking at the thing. And if you don't think that's real, just inspect a lot of your thought processes. We've all got it. It's a part of being human. Okay. So I tell my son, he asked me if we can pay for some coaching, for some baseball stuff. And I said, okay, well, let's talk about that. Where's your finances at? How much money are you making? And he just didn't want, he's like, well, I mean, I don't know. I don't think I can really afford it. I'm like, well, how much do you make? Like, well, what do you mean? I'm like, well, how much money are you going to make this month? He's like, well, I don't know. I haven't been paid very many paychecks yet. I'm like, do you know the hourly rate? Do you know how many hours do you have when's your schedule go through? And he's like, through April 12th. I'm like, so we know exactly how much money you're going to make because you're paid by the hour. Your schedule is already cooked for the whole month of March. So we could really come up down to the penny. He's like, well, I don't know what taxes are going to be. I said, I do. Like, you ask ChatGPT that shit. It'll tell you. And he's like, oh, okay. But here's all this resistance. Again, I won't know. I won't know all taxes. I won't know taxes. I won't know how many hours. Oh, wait, I'll know the hours. Like, what are you pretending not to know? So my wife is telling me, like, look, you got to cut it off. Don't be mean to the kid. He's a good kid. I'm like, I know he's a good kid. He's great, but he needs to engage with something because he's got spending problems, right? He's like any kid that's 18 that gets $400 paycheck, and then all of a sudden he can go out to eat every single meal with his buddies and his girlfriends, right? That's normal unless you pause and you make a decision and a plan for that. So the first step, like those are some of the red flags when you don't know, and looking at some of the resistance to some of those basic things that need to be addressed. But then in his case, I just continued to push him and let him come up with something where he needs to contribute a certain amount for certain funds. And it usually doesn't take much to get people in a better position. But what I would tell everyone out there is Rome isn't built in a day. And you don't need to go from your current level of understanding with numbers to master's level accountant. And that's not a path that you ever need to go through. But could you get a little bit better this quarter with understanding some of your numbers? Could you begin to understand where your payroll is? Could you? And so I don't want anybody to take how much is your payroll last week, and if they can't answer the question down to the penny, think that they're doing a bad job. It's just an indicator or a flag that says you could probably be doing a better job. So let's put together a system, whether it's applicable for a senior in high school or for you or somewhere in between, that you begin getting a little bit better at some of the metrics and some of the foundational stuff that will help you make better decisions that are not just reactive decisions.
Couldn't agree more. And like strategic blindness, especially financially, is something that I've seen pretty frequent.
Yeah.
And you don't need to know every number, but what are your like top three most important numbers? Figure out what those are, and then kind of at least start there. If once you have those down, you know how to move levers to actually influence the numbers in a positive direction, or at least be able to see a trend if it's going negative. Then you can scale from there. To your point, like in the next 90 days, what is the most important thing for you to go learn financially, and how do you learn that?
Yeah, and it's again, I would just say that it's a journey. It's not a jump. So you don't need to look at the end to start, and it is just taking a step or two. So start taking some steps and just learn this much more about your numbers this month. Maybe it's just one. What is one number? What is your accounts receivable? How long does it take your average invoice to get collected? Start there. It's easy. Because if you start looking at that 2 or 3 times every week, one thing that I'll promise you, that number will go down. The amount of time between your invoice going out and you collecting money, magically, that's not magic, it will go down because you're paying attention to it. And so if you find yourself in a cash flow situation where sometimes you feel the pinch of bills going out, that might be number one thing to look at. Time to invoice, maybe even back it up one step and say time of service to time of invoice to time of collection. Look at that little daisy chain of those two events taking place and just look at those every single day, 2-3 times a week. Watch what happens.
Couldn't agree more. It's shocking what happens when you focus on something. How it just
Yeah,
unmagically,
it
but
does.
dramatically improves just because you focus
Totally.
on it for a
Totally.
short period of time.
Yep.
So beyond finances, I know like kind of HR, admin stuff. A lot of people look at that as just kind of overhead. Um, in my opinion, that's a dangerous mindset. But I'm curious on your thoughts, and if you agree, why would that be a dangerous mindset?
I think it's super dangerous. And I think it's mission critical dangerous because most people that start a business don't do it because they have an MBA. They don't have a master's degree in business administration. They don't understand all the. I still don't. I've got a PhD from the School of Hard Knocks, probably a couple of them, but I've not had any formal schooling or anything to help me understand how business works. But I've got the shit kicked out of me a bunch, and I've had mentors and coaches to help me learn things and in a shorter timetable than trial and error would teach me. The reason that I think it's dangerous is because given that we just said, like people start in their craft, right? And their crafts could be the kitchen baking cookies or out pulling wire in a house or a commercial building or whatever. But they have this thing that they're good at that they feel like, hey, I can do that as good as anybody. I'm going to go do that for myself. And then they start doing that craft. And this admin stuff is always kind of like the back burner. What that creates, Joe, is a bit of a complex web where every new addition into the business, whether it's a new hire, a new job, a new tax bracket you've just reached, literally anything adds more complexity. And that thing that gets more complicated and more complex now creates what you referred to as that center of gravity back to the person who started the business. And I don't give a shit if you've got 15 employees or 25 employees or more. If you have ignored the back office and instead hired people in the field, people in sales, people in marketing to try to grow your business, you are going to be the epicenter of that gravitational pull because not a single person in that business will have anywhere close to the amount of knowledge or context about how that business works than you. And when that's true, guess where everything goes? To you. Yeah. So that's just it. Right. And that's why I think it's so dangerous because it's, if I'm a plumber, I think, man, I'm so busy. I can't get to my kids' baseball games and I want to go. I'm going to hire somebody to come help me plumb these houses. And then that first challenge that I run into, and I hear this shit all the time, is I have a hard time finding somebody that does it as good as me. Do you think? You're never going to find somebody who does it as good as you because nobody's ever
Yep.
going to give a shit about it like you do, right? So that's the first complex thing. That's the first friction. It's like, no, I told you to plumb it this way. I want you to goop the pipes this way and then put the thing in. And you're always going to be fighting that. So guess where the time goes? It shrinks because you're now wasting time fighting with a technician, with some laborer out in the field who isn't quite as meticulous as you are. To somebody that goes into a customer's house and drags mud across the floor. They don't take their boots off. Now, what do you got to do? Take the call from Mrs. Smith, who's pissed that her new carpet's ruined. Then you got to talk to Johnny who did it. And then you got to try to sort that out. All of that can be avoided. All of it can be avoided if you first build a foundation to cover the structure that will actually hold the structure. So when somebody reaches that breaking point, I wish there was a way that I could get them to to understand right there when they start feeling that pain, like they grow, they start out, they hang their shingle up, and it's like, I'm going to do my own thing. They got to hustle. They got to, like, the first 6 months, 12 months or so, whatever, until they reach like $300,000, just do you. Just keep doing it. Because yes, there's some risk and there's some structural things, but most people aren't going to run into a lot of major issues. They're going to have problems to solve. They got to find supplies. They got to get better prices. They got to give quotes. They got to balance customer service with delivering the product and goods and services. But then they get this point where it's like 250, 300, 350,000, and all of a sudden that starts to pull on them. And it gets harder to manage at that level. That's where I want everybody to just stop. If I had a magic wand, I'd say freeze. You need to learn the sequencing of business scale right here. Don't do anything until, like, I have a program, I have a document that I share with people. It's called our delegation priority pyramid. And it's the structure for how to sequence your growth. And it really boils things down to how you hire people and the sort of functions that you want to begin letting go of. So think those $10,000 levers, the big ones. Like, I try to teach these people, stay with the big levers. Never give away your big levers because no one will ever care. Give away the smallest one first. So guess where the smallest levers usually live? And when I say small lever, I mean, you can hire somebody cheap to do the work. If they break the lever, it's not even going to cost that much to repair. And while it's broken, the end of the world is not going to show up. Like, it's, you know, it might be an inconvenience, but it's not going to break the business or ruin its reputation entirely.
Yep.
Back office,
Agreed,
Joe.
totally.
Right? Like,
Agreed.
you can send the wrong invoice to a customer and you can say it's $112,000 when it's only supposed to be $1,200, and that customer is not going to be happy, but it's not going to ruin your reputation. You know that. So these are things that if you put that sort of foundation in place, now you're no longer. How much can you hire somebody to send invoices for? $20 an hour? I
Probably less, depending on where you're at. Yeah.
Totally. But the guy out in the field that you got to hire to do plumbing, that's a journeyman, or, you know what I mean? Like, those people, you're not getting them for $18 an hour that are worth a shit. So now you're spending more money and they are delivering your goods and services. So you're real particular about whether or not they're doing a good job. So now more of your time goes. You see how this, it's a cascade. But if you start with, you know, as a matter of fact, like, if anybody here feels like you're at that point, I will give you my delegation pyramid framework. And it's a few pages on a Google Doc, but it lays out exactly how to do this, how to follow the sequence so that you don't make the mistake. And I learned this from my mentor in 2006. So 20 years ago now is when I started hiring people up higher. Like, I started hiring the technicians. I started hiring, and just in time, he didn't even try to talk me out of it. He said, well, we'll just, while we're doing that, let's also look at this. And he taught me the importance of the back office. And I started using a tape recorder for emails instead of writing them myself, because I saved hours every day. And I just dictate them before we had all these cool tools that we have now. And then I'd give it to somebody who would just sit there and type them up for another few hours. That was $15-12 an hour, you know? The emails went out. Sometimes there was typos, but again, not the end of the world. No big deal. So those are some real leverage pieces. But that's what I'm saying. If there's anybody here that's listening that feels like you're reaching that stretching point, you know, you kind of got to the top of level 1 and you're about to just get stretched beyond your means, just come over and find me on Instagram and DM me the word pyramid and Joe Pyramids. I know where you came from, and I'll send it to you. It's yours. You can have it. Yeah. And that'll really help you rethink, what should I do next? Because a few minutes spent on the wrong thing, well, as the saying goes, the right thing at the wrong time is not the right thing, right? So doing sequentially what needs to be done in your business is just as important as knowing what to do in your business is the when.
Couldn't agree more. And I love the fact you threw your Instagram handle out there. So if you didn't catch it, scroll down. We'll put it in the commentary. But beyond Instagram, Justin, obviously this has been a magical conversation, and we could probably spend hours talking about every single lever to make a business better or help a founder get to the next level. But at the end of the day, if this episode resonated with somebody and they want to reach out to you and your team, is Instagram the right way for them to go about it? Is there another route that you'd like them to go to engage with you?
Right. I mean, you can check out our website at propelyour.com, but we do put out content every single day. Instagram's probably where we are the most, like we publish the most, and we just want to share as much information as possible. You know, I'm lucky to have had mentors and coaches that have helped me understand some of this stuff. And I went from grinding to get to a six-figure income, working 20 hours, 2 or 3 days a week, and 16 hours the other days. I mean, I worked a lot, to the very next year doing over $3 million of income, not gross revenue. Like, once you know how to sequence things, the levers and the leverage that you can get becomes unbelievable. So, that was 20 years ago, like I said, and I've had a great 20 years. So I've really, we try to share all this stuff in short little, 30, 60, 90-second messages. So definitely come check us out on Instagram at It's Justin Lund. And we're same handle on YouTube, LinkedIn, TikTok. We're on all the others, but our focus is right now mostly on Instagram, with some of the longer videos going on YouTube, of course.
I love that. I love that. This has been fantastic, Justin. I know you're a super busy guy, obviously helping a ton of clients yourself and then driving the business on your end. But what you and your team are doing is solving something that, in my opinion, founders underestimate: operational infrastructure. It's not always glamorous, but it's super important and impactful to be able to get to the next level. So I sincerely appreciate you taking time out of your day for myself and for our audience and sharing your origin story for the business, how you help clients, and how they can actually engage with you. Thank you so much.
You bet. 100%. Loved it. Great to be here.
Cool. So for everybody out there listening, if you want to figure out how to take the next step in your business, I will put all the links to Justin and his team in the commentary and the links. So just scroll down and check them out. Reach out to them, because the later you wait to start, the slower you're going to be able to get to the place of scale. So for everybody out there, thank you so much for joining us on today's episode of Lead, Manage, and Thrive. Shout out again to Justin and his team for taking time out of their busy schedule to be with us today. And we look forward to seeing everybody on the next episode. Thanks, everyone.